All right, Chris, why don't you lead us off? I know you're going to be moderating us today, so you can welcome everyone and we can get going.
Yeah, absolutely. Well, thank you everyone for joining us today. We're very excited to finally be at a stage where we could announce this change to Fidelity. And we really wanted to prioritize taking some time out to really speak to this and giving everyone access to this webinar so that we can kind of address head on the reasons for deciding to make the move to Fidelity and what that's going to mean for each of our clients. So we wanted to spend some time there. I asked John and Jerrod to join me on this call. They obviously have a tremendous amount of experience working with Raymond James and each of our clients. And they were also extremely integral to the decision to make a change in the first place. And so I thought it'd be helpful for them to, in their words, speak to why this change made sense and what's in store for us moving forward. So with that, we have prepared some slides to run through. So we'll kind of run through our slides to start. I encourage you all, if you have questions, please pop them in the question and answer feature using the Zoom app, and we'll address those. We'll probably hold the questions to the end, and then we'll go ahead and address those all at once at the end. So feel free throughout to add your questions, and then we'll tackle them once we've made it through the slides. And with that, that's all I've got. So let's go ahead and get started. We have some disclosure slides here. So our agenda today, at the high level, again, we'll run through each of these, in a lot more detail. But we wanted to talk about why Vance Wealth decided that making a custodian change made sense. We want to address the decision to use Fidelity for our custodian moving forward, and a little bit on the timing of that. Why did we choose to do this right now? We wanted to talk about some of the benefits for this change and what we think our clients are going to experience by making the change to Fidelity. And then we wanted to get into some of the tactics, the specifics around the actual change, what that's going to mean, and what you can expect from us. So we'll go ahead and jump in. If you have questions, like I said, feel free to put those in the chat, and we'll go from there. So John, I'm going to have you go ahead and take us. Why don't you start us off here? And if I can move the slide forward, there we go. I think just maybe, touch on what we put together here and really kind of address this main question around the custodian change and what led us to this place, or what led us to this point.
All right. Well, it's an interesting activity to go through and look, over the past 20 years. And we affiliated with Raymond James back in 2003. And we opened a branch. When I say we, it was really me, because it wasn't a company at that point. It was just me as an advisor. We opened it through Raymond James independent broker dealer, so their independent channel. I knew at that time it was really important to me, as I put the entrepreneur hat on, was to go out there and make sure I affiliated with a firm that really embraced this idea of independence. And so, that's really where Vance Wealth started. And it's pretty crazy to look back, because it's now been essentially, I believe, February, March timeframe of 2023. Now that we're in, it'll be 20 years. So it's been quite a journey. Many of you on this webinar today have been along for the entire journey. So you've seen a lot of changes as we continue to move forward. So it's been exciting for me, my own personal growth, the ability to serve so many of you. And so, it's truly like looking back over these last 20 years, just have so much gratitude around, not only the clients that have supported me, and I've supported them, and then also as we've grown as a team, it's really exciting. So this transition, as we'll go through, was really something that I knew was going to unfold over time. You never know how this is going to play out. But when we look back over the last 20 years, it's been quite a journey, and we're looking forward to the next 20 years ahead of us. And so, over the last 20 years, we've seen the industry has changed tremendously. We went from an industry that was, I would say, much more investment focused and investment central, and we went to an environment that was much more financial planning focused. So as we look at this journey, as I started the firm in 2003, in 2005, I actually got my CFP certification, and so that really took our firm down this path of financial planning, and why financial planning, tax planning, investment planning, all of those things are so critically important to deliver the proper advice to our clients. And I made a decision, in 2008. You can see on here Jerrod Ferguson, who's our vice president. He's really one of our lead advisors. And so I want to add a little bit of humor in this, as looking back at what I would deem as how young we were back in the day. So this is actually a picture from it looked like an 80s style photo shoot back in 2008. There's a snapshot of me. And then we're going to pull Jerrod in here a little bit. So we definitely have grown up as a firm and as individuals over the last 15 years. I'm sure our pictures from 15, 20 years from now are going to look quite different. But basically at that point, when I brought Jerrod in as a new advisor, we made the decision as a firm, we wanted to grow. I wanted to create an environment where we could serve more clients, make a bigger impact on the community, and then also grow as a firm so that I could create a place where people could really build a career. And because we feel like our industry, being in financial services, is so powerful because we make such an impact on the lives of our clients. And so that really started this transition. And you guys have all seen a lot of growth. And I know at times people view growth as, sometimes people view it as not a great thing. We really embrace it as a great thing because it allows us to get better. It allows us to have an abundance mindset. It truly allows us to make a bigger impact. And that's really the focus of Vance Wealth, is how do we get better? How do we make a bigger impact on our clients? And how do we make have a bigger footprint on our employees as well as in the community? So you can see the transition as we go through. We started adding more specialties throughout the years, and things like business planning, doing more tax planning. Our advanced 401k division was launched in 2017, which was really designed for corporate 401k plans. And then in 2020, we made a decision. This had nothing to do with COVID, but actually in hindsight, because of the affiliation of deciding to form our own registered investment advisor, or RIA. I know sometimes we throw that term out as we are an RIA. Well, that stands for registered investment advisor. And that really just means that our job is to advise our clients on their investments and manage their investments. And most importantly, what it really puts us in this role as a fiduciary. So where we have to act in the best interest of our clients. Frankly, I don't know how you do what we do without that mantra, but that's what we embrace every day, is how do we put our clients' interests first? How do we take care of you? And so that change in 2020, timing was actually great for us because, as you remember, we did a lot of webinars. It was really important for us to get out there in the community and make sure we were communicating what's happening. And so being that independent RIA really started this and really helped us deliver even more communication. And again, just because it created a more independent environment. And so as we then transition into our conversation today, is that we are moving to Fidelity Institutional, which technically it's through National Financial Services, LLC. And they are our custodian. And so all of our clients are going to be moving their accounts from Raymond James to Fidelity. And that's what we're going to talk about today, is the mechanics of that. So I just wanted to share this journey. It's very prideful to look back and look at the journey we've been on. And I'm very excited for the next 20 years. And, we're building a firm that's going to survive me and survive many of you. And that's what we want to do, is we want to be in a position that we can continue to grow and continue to make an impact. So thank you for your time today. And again, I know we're going to go through some data here on these following slides, but this is really just meant to share a little bit of an insight of how we got to where we are today.
Great, thanks, John. And I think that's a good segue then into the next slide, which is on why Fidelity. So we kind of talked about the decision to make a change, but why did we choose Fidelity? So Jerrod, why don't you go ahead and kind of tackle this and speak to this?
Yeah, I think most of our clients here today are, just maybe hearing about this in the last few weeks or the last month, but really as a firm, we've been doing our due diligence over the last probably 6 to 9 months and determining, is RJ Raymond James is still the best fit going forward? And I think we identified that we needed to make a change. And so we really were doing that due diligence, and I'll get into a lot more benefits, or we will, as we go through this presentation, but I'll stay a little bit more high level on why Fidelity is the right firm. And just in the first bullet point, they're one of the largest providers of financial services, and its custody business administers more than 4.5 trillion as of year end 2022. And so, 1 out of every 4 Americans have a Fidelity account, which is pretty remarkable to say. I think because of that, not the only reason, but a reason, was a lot of our clients that are still working have a Fidelity 401k. So I think we're going to be able to serve those 401ks a lot more effectively going forward, which is going to be a huge benefit. Fidelity is the second largest RIA, registered investment advisor custodian in the industry, providing a comprehensive custody platform, brokerage services, trading capabilities, and practice management and consulting to registered investment advisors. Ultimately, we think by getting additional services and benefits from Fidelity, that's going to trickle down to our clients and improve your experience, right? I mean, at the end of the day, we're a fiduciary, and we need to make sure that we're acting in the best interest of our clients. And part of that was deciding we needed a new custodian going forward. And Fidelity has robust integrations with technology vendors in the RIA space. This was actually one of the biggest sticking points for us, because what we determined was we were running into a lot of issues on the technology side. And because we're independent, because we're a registered investment advisor, we can kind of use our own technologies and services that are outside of whatever custodian we decide to be with. And so what was happening was the Raymond James ecosystem was not talking to a lot of the services or platforms that we were using, and we were running into issues there. So that kind of started this whole thing of, once we branched out 2 years ago, we were running into some issues on the technology side, and our compliance firm was like, hey, these are some longer term issues that we need to deal with. And that kind of started the ball rolling. I think Raymond James really tried to fit us inside their ecosystem. And when John went through that platform, 20 years ago, it made a lot of sense, because John was worried about growing the firm and kind of staffing and deciding what clients to take on. And we didn't want to have to deal with everything outside of our day-to-day practice. And so we've obviously grown to a size where we want to have more control over that. And we were determining that we actually don't fit in Raymond James box anymore. So I think that's actually okay. And it's really exciting for me, because one of our core values as a firm is committed to continuous growth, right? And when we look at our team members, that's what we're looking for in our team members. We're looking for that in you, in our clients. And I think we ultimately are looking for that in our custodian. And we determined that Raymond James was not doing that, was not committed to continuous growth, and Fidelity was. I think they invest 10 times the amount into their technology and client service platform than Raymond James does. So that's a huge reason to make the move now.
Great.
And
Yeah,
hey, you mind if I just jump in and say something real quick on this? Because I think that just to add on to what Jerrod was saying, when you look at this as size, it's like, I think we don't always think that, bigger is better. And so the one thing that's great about the experience with us as a firm is you are not going to lose this boutique feel of the service model that we deliver. We just feel like we're now have a stronger behind the scenes partner that can allow us to serve you better. And especially as we adapt in technology and how we communicate with clients, we just feel like this firm is going to be a lot far ahead. And so when Jerrod talked about issues around technology, we don't think you were seeing them. We were just dealing with them because we were constantly trying to get better and find better ways to communicate. And there was those roadblocks. And so we don't think it actually impacted our ability or the stuff you saw on the back end, but we know, hey, we want to get better. How do we make this better? And that's where we feel like this partnership will be a nice mix of the boutique experience that you've always had with Vance Wealth, but an even stronger powerhouse behind the scenes.
Great, thanks, Sean. Yeah, I think that's a great segue then into our next slide here, which just has to do more with the timing, right? Why are we doing this now? And I think, John, maybe you can speak to this. Why didn't we do this before, and why also right now? Like, why is this an urgent thing, and why did this become a priority for our firm today?
Yeah, so I guess the why right now and why not 2 years ago is when we made the transition to an independent RIA and into this new channel as a different relationship with Raymond James. We wanted it to be we wanted to have the least amount of disruption with our clients as possible. So the idea that basically your accounts would just remain at Raymond James, it was seamless for you, and we felt like that was the first transition as we embarked down this path. And we felt that Raymond James actually could fulfill exactly what we needed as we were growing as a firm. And so over the last 12 to 18 months, again, it just became clear that, I don't think Raymond James was purposefully detracting from this, but they just weren't allowing us to grow. They were not allowing us to have full independence like that we envisioned. And so we got to a point where, there's a lot of due diligence and research that has to go on behind the scenes. There's a lot that goes into actually making this transition of moving all of our clients. And so it gave us enough of a runway to build a timeline on how we're going to actually get this done and do it in the most effective way. And we decided to do it in the first quarter of 2023, primarily because, as we know, a lot of reporting that comes out of your custodian, a lot of it is tax related, and we didn't want to have any disruption and have two firms, and where you're getting two sets of reporting from the firms. And so I think that we're going to talk about that a little bit later, but we decided the first quarter of this year was just going to be optimal, because as we embark on building better technology to communicate, making this transition was really just a must in our mind.
Great. Well, so I don't know if we kind of touched on some of this already, or if there's more to add here around kind of why not sooner?
I don't know. I mean, I guess it's trying to be prudent. As you guys all know me, like, I'm a quick decision maker as an entrepreneur. I like to move forward, and I think that making sure we affiliated with the right firm there. We did look at Charles Schwab and Fidelity side by side. And it was a tough decision. They were both really strong. I think that at the end of the day, we felt like either was going to be an improvement and really be a great firm to help our, to basically custody our clients' assets. And so timing was just right. And why not sooner is we needed to get our ducks in a row, because we wanted to make sure this transition was smooth, and we wanted to make sure we had our team in place ready to basically execute and deliver and be able to move the accounts in a seamless way.
Yeah, I think the last, when we went to the end of, or the RIA channel of Raymond James, I mean, there wasn't really much disruption from our client perspective, I don't think, just because you maintain your same account number, the financial plan stayed in place, performance was all intact, right? Like, everything, we just kind of moved from one division or channel from Raymond James to another. And so this, I think John mentioned it, is there was a lot more pre-planning that went into it, and we needed to make sure that we've asked and answered all the questions that are going to come up, because there is going to be a little bit more required, not only from our firm internally, but maybe a little bit more from our clients, just with docu-signing and signing account paperwork.
Yep, no, that's a good point. I think you're right. I mean, there was certainly an adjustment period. I know I came back shortly after the change to an RIA. But you're right. I mean, we in the eyes of the industry stayed at the same firm, right? And so it wasn't as large of a shift. And I think the timing, and from internal conversations I've had with the two of you, it just seemed to make sense to move now, right? So let's go ahead and move to this then. So John, maybe you can touch on this as well. Just thinking about the shift and what benefits are derived from this, right? We've talked about making the move and why we kind of decided, but what at the end of the day are going to be some of the benefits that our clients are going to receive from doing this?
So is this a John or Jerrod item? I'm happy to tackle it if you want, but
why don't you go ahead and tackle it, and then Jerrod, feel free to jump in wherever you'd like.
Yeah, I mean, I think the first place we start with is, how do we make a bigger impact on clients, right? So, we always want to start with what are the benefits. And so, we wanted, the reality is Fidelity is larger than Raymond James. There are more resources. So you can see some of these items on here in terms of a broader selection of investments, just a deeper bench when it comes to it. As our clients' needs change, one of the cool things about what we do is we get to, we're serving multiple generations of one family, which is like, that's so fun, right? Where we get to work with the grandparents and the parents and the kids and the grandkids. And Fidelity just had a really deep service offering to help us be more effective in those conversations. So that was a big value add to me, as I really looked at this from the side of, okay, how can we be better at what we do? And some of these bullet points here I'll let Jerrod run through, but these are just some of the mechanics of, hey, we know it's going to be better off by making the change, and these are some areas we can actually quantify.
Yeah, I mean, more investment selection. I think we weren't really limited before, but it just enhances that. Digital capabilities. Raymond James was, I think, a little bit behind the times in terms of technology upgrades and the way that we're able to do things. So I think the experience of opening new accounts, signing documents should be a lot more seamless. Reduced mutual fund transaction costs for non-partner funds, and 0% equity trade. So I think Raymond James had that as well. So there's going to be no change there. And then online platform for allowing for security alerts so that you're aware of activity in the account. So I think just being able, from a client perspective, being able to customize what you want from a custodian a little bit more than Raymond James.
Yeah. Great. Well, then that's a good segue then, Jerrod, for you to maybe jump into some of the actual specifics about kind of the change and what clients can expect as we move forward.
Yeah, so you guys already mentioned that Fidelity Institutional will serve as the custodian. So technically, it's National Financial Services LLC. Really, they're taking the place of Raymond James as their custodian. So we, I think, throw out custodian or mention it and maybe forget what they actually do or what their responsibilities are. So to execute clear and settled trades. Obviously, they provide periodic statements, and they'll send you monthly or quarterly statements, tax documentation, retirement account distribution confirmations, everything to prepare you for meeting with your tax professional. The custody or safekeeping, receipt, and delivery of funds and securities, and then the extension of margin credit upon approval, or if you have a securities-based line of credit, allowing you to have that attached to your account. So nothing changes in terms of Vance Wealth's ability to provide advice. The way that you contact our firm, right? So I think when we were with Raymond James, we're the intermediary, right? Clients contact us, and if we need to get a question answered, we contact our custodian. And so previously it was Raymond James, that's now going to be Fidelity. So your interaction with Fidelity or Raymond James, I mean, it's pretty minimal. And we still want to be that first point of contact, that if anything is, you have questions about your accounts or something's not looking right on your end, that's something for us to track down the answer, right? You contact our firm, and we'll go get the answer. So your meeting schedule, kind of fee arrangement, anything like that, who serves you, nothing like that is going to change as we're moving custodians.
Okay, great. Well, then let's talk about the actual move, Jerrod. So maybe you can also walk us through this, and just in terms of next steps for clients. So we've talked about the reasoning why and what role Fidelity is playing as custodian and what that means, but what actually comes next? What are the next steps? What should clients expect?
Yeah, so for the last couple of weeks, we've been working, trying to basically send out these positive consent forms. What that is kind of a requirement for our California clients, that we need our clients' consent to be able to pre-fill the account opening forms at Fidelity. So we obviously are trying to make this as easy and seamless as possible. And so if there's these DocuSigns coming through, that's what allows us to start this process for your accounts. And so that is something that if we're still waiting on getting one back from you, Robin's going to be sending or resending out the positive consent, I believe, this afternoon. So shortly after this call. That, and then anyone outside of California, we're going to be able to use the information that we have on file to give to Fidelity to open the account. So if you have 2 IRAs and a brokerage account, you're going to at Raymond James, you're going to have 2 IRAs and a brokerage account at Fidelity. So we're just going to mirror what we have on the Raymond James side to the Fidelity side. And so once that happens, we'll send you the documents for your signature electronically. And then once they're signed, then your accounts are open at Fidelity. So I think there's going to be a kind of a digital experience. We're hoping that everything can be signed electronically. Of course, there's exceptions. Of course, there's one-offs that we might need to send you something via DocuSign, kind of in addition to what you already received. There might be something that's going to require a wet signature. We're not exactly sure. For every single person, there might be some exceptions, so please allow for that. And then assets, I think, and most importantly, assets will transfer as is. So they come over, we don't have to liquidate funds, sit in cash, be out of the market, and then make that transition. So we're not going to be forced to sell any investments. There are, again, a few limited exceptions that we're going to be working with those clients individually and kind of being transparent about what needs to happen. And then the Vance team will confirm that all assets transferred and nothing's left behind. So I think the beauty of this is, when we went from the independent channel of Raymond James to the RA channel of Raymond James, we had flipped a switch. It was a flip a switch one day, overnight it happened. And so the beauty of this transition is actually we're not going to have the lights turned off at Raymond James until we kind of say so. So we're going to be able to have kind of dual access and be able to confirm that all accounts came over as is. Nothing was left behind. If we need to reference any information, we can grab that and then make sure it's on our system before kind of fully transitioning. So I think the one thing to note is Raymond James, just like any custodian, will charge an account closing fee. I believe that's $125 per account. And so that's something to note, but Fidelity will make you whole and reimburse you for that. So that was part of the contract negotiation. Was we know that there's going to be an account closing fee on the Raymond James side. We want to make sure that our clients are made whole and aren't really penalized financially for making the change. That was our decision.
Right. And you're right. That was one of the points we wanted to make sure of. And it's pretty standard within the industry when you make these changes that, no one wants clients to be harmed in the whole transaction. So we want to make sure that that happens. So technically you will see in your account, right, $125 get deducted in each account when it leaves Raymond James. So that should show up on your final closing statement at Raymond James. Then in the Fidelity end, you'll actually see the reimbursement. So $125 deposited on their end. So that will all be taken care of through the transfer process. So I think that's all we kind of formally prepared for today. So we'll pause now and answer some questions. We've had a few come in, so we can start with those. And then please, I encourage everyone else, if you have any specific questions, feel free to weigh in. So I think the first one that we'll address here, I was just looking at our list. So will historical data such as lifetime returns, things of that nature, be carried forward to Fidelity? So I can maybe speak to just the mechanics of that. And then John, maybe you can speak a little bit after that to just kind of our strategy or how we're thinking about that, why we feel like that was an important part of this decision-making process. So mechanically speaking, we are in the process of or moving a lot of our performance reporting away from, or have been in this process, away from Raymond James and into an internal system that we use here. And so a lot of that data we've already downloaded and captured out of Raymond James. One of the issues we were experiencing was that Raymond James isn't great at sharing historical data on their own. So it was actually a fairly manual and laborious process for us to do that. But it is our goal and our intention that we can maintain that historical performance, into the future. We are also running through a few backup scenarios where if any of that gets disrupted, we have a few backups to lean on. And so we have kind of some redundancies that we've built into our process. But it's our goal to kind of continue to be able to report on the historical performance of the accounts. Once at Fidelity, obviously we'll be able to continue to build that performance. And so we're still working through the exact mechanics of how we can seamlessly demonstrate or show that historical performance to clients. But we have been working really actually tirelessly with multiple members of the team on this, trying to get to the best client outcome we can as it relates to seeing the performance. So John, I don't know if you want to speak kind of just high level about that, but that's kind of the main point, I guess.
Yeah. So just to add to what you were saying, Chris. So the one thing that won't happen is when it goes to Fidelity, you're gonna start new performance with Fidelity that from their basically performance reporting engine. So when you log into the account and you see performance, it's going to be from the inception of when the money's at Fidelity. So they won't pull all that back data in. However, like Chris mentioned, we do have a reporting tool that basically is going to allow us to have all the Raymond James data plus the Fidelity on a go forward, so we can capture all of that. And so that's obviously really important because we want to be able to maintain the history of all your deposits and withdrawals and year-over-year performance. All those things are really important because it allows us to measure the success and how you've done in the past. And so Chris also mentioned we have some backups. So we're going to be in a good position where we're going to have the data. What we're trying to do is make sure it's in something that's really uniform in a reporting tool that's just easy as a click of a button. Anytime you need it, we can get access to it. So we're pretty confident that there's not going to be any disruption, but just want to make you clear that once you set up your Fidelity login on their site, that data won't be available because Fidelity they'll only track performance once it's at Fidelity.
Right. And so John, that's actually a good segue. Maybe you can tackle this as well. Will I lose access to my online account at Raymond James? And we talked to them about that, but you want to just speak to how the online access at Raymond James will continue after clients move their accounts to Fidelity?
Yeah, basically what they've told us is that all the online access will still be available. Your login will still be good, even when accounts leave. So you'll have access to Doc Vault. You'll have access to I think it's about a decade worth of investment statements. So you'll still have access to that. Once we get up online and we go through like the 2023 tax season, you're probably not going to have a big need to maintain an access to it, but you will have access and that was really important for us. We didn't want to just be cut off where we didn't have information. And then obviously you'll have to set up a new Fidelity a login, and we will be assisting with that. But again, getting back to some of the comments Jerrod made earlier, is their technology is just so much easier to use that process is even going to be easier and faster.
Yeah. And there was another question that just trickled in, but it was, will we receive tax docs from Raymond James or Fidelity? And the answer is you'll receive your tax documents for 2022 from Raymond James, because that year is already in the past. For 2023, you will receive documents from both. So there will be Raymond James documents for the first month or two of the year where there's been some overlap. And then you'll receive, once the assets transfer, Fidelity is now the custodian. They'll have the responsibility to report taxes as well. So in 2024, when you're working on your 2023 return, you'll have two sets of tax documents to get because of the transition.
And we'll do a good,
yeah.
Yeah. Oh, sorry, Jerrod.
Yeah, I was going to say, I think that's something that we can remind clients about is, hey, don't forget you're going to have two 1099s for the 2023 tax year or retirement account summaries. And that's also why we review tax returns, right? Just to make sure that data is getting picked up correctly. So I don't foresee any issues there.
Okay. Let's see. Will we have a donor advised fund? Is that going to come over as well? Jerrod, I know you and I have sat looking at things like donor advised funds and 529s. You want to maybe just speak to, those are kind of unique account types, and I'm happy to weigh in as well, but you want to speak to just kind of the donor advised process and maybe the 529 process?
Yeah, so I think what we determined was we want to make sure that we get all of our client accounts transferred, kind of the traditional accounts, retirement accounts, brokerage accounts transferred in the first wave, and that's going to be our main focus initially. Then we know that donor advised funds, 529 accounts are going to be kind of that second list of accounts, and so we're going to be working with clients directly on those. The donor advised fund is going to be very similar in terms of a transfer. It's going to go from one donor advised fund at Raymond James to a donor advised fund on the Fidelity platform. So there's going to be additional paperwork that's required. And then I think similarly on the 529s, having to make sure that those are opened on the Fidelity platform first, which I think we're going to be able to maybe guide you through that. And then we'll have a transfer from whatever Raymond James 529 to the new Fidelity one.
Yeah, and just to let you all know, I have a donor advised fund. I have multiple 529s for my daughters, and so yeah, when we looked at the options, it's not identical, but they're very similar, and we're still working through what the best choice will be. Again, that's something that I'm faced, and so I know it impacts not a huge amount of our clients, but probably about 30 to 40 of our clients, and so we'll be working through the best solutions. But again, because we're still going to have access to the Raymond James platform, we're not going to lose the ability to advise you and serve you.
Yep. Okay, great. When will we receive the final statement from Raymond James? So my understanding, let's say your accounts transfer in the month of February. So you'll get a February statement from Raymond James showing that the transfer left the account and should reflect a zero balance at the end of the month. And that should be your last statement from Raymond James. Potentially, if there's a quarterly statement, you might receive a quarterly summary, but that's really going to be your last statement. And then you'll begin receiving a Fidelity statement shortly thereafter, right? You'll see a February statement come in from Fidelity as well. So you'll receive 1 month likely of overlap if you're on the monthly statement, or 1 quarter if you're on a quarterly statement. But that's how that will work.
And Chris, like a lot, it's not a lot, but there are a lot of, or a fair amount of accounts, I should say, that get an annual statement as well. So the statements will stop throughout the year, but they might get an annual statement once the year's over.
Okay, great. Another asked about an annuity. So what about my Jackson annuity? Will that change somehow?
No, when we moved from the independent channel of Raymond James to the RIA, we ended up working with a firm called Mutual Securities. They're the ones that took over all the annuity business. kind of under their umbrella, we still advise on them, but that's something that there's not going to be a change there.
That's right. Okay. Let's see. If you're using an account program like Quicken to download information, will we be able to continue to do that through Fidelity? I don't know specifically. I will confirm with them and get back to you. Looks like Wendy wrote this question in, so we can confirm. But my understanding is yes. I mean, like we said, Fidelity's technology is really strong. Most banking institutions have that Quicken download capability, so do not specifically look into that, and I will. But my understanding is that you should be able to get something like that directly out of Fidelity. But we'll confirm specifically on Quicken. We didn't answer that question, so we will get that one addressed. Let's see. If I already have a Fidelity login, will it merge with the Raymond James transfer accounts? So that's another good question. Like we said, a lot of people already have Fidelity login. So how's that going to work? The way that the login should work, and again, we can confirm this on the back end. It looks like Stacy asked this question, so we'll make sure to confirm with you directly. But it's my understanding that your login is associated with your social security number. And so that login will tie all of your accounts to your through your social security number. And then what actually happens when we open these accounts is we set up kind of a tagging number to our firm that allows us visibility to the accounts we're opening. So, you know, one of the, like Jerrod, I think, mentioned earlier in the presentation, one of the advantages for clients who have existing Fidelity accounts is they want us to have even just viewing access to their accounts. We have the ability to set that up, but I also believe we have the ability to bifurcate that. So if you have, you know, a 401k account and you want to continue to have that separate, you should still see it all in one login place. We will only see the accounts that you give us that viewing access to. But it is my understanding that your social security number is what drives the user login. And so as long as those social security numbers are matching up, then you should be able to see everything through the same login. But we can ask that directly and make sure we get a confirmed answer. Another question. I have RJ cash account and a portfolio account. Well, I have two accounts with Fidelity.
Yeah, I think I can
Jerrod,
take that. Yeah, I think we're going to basically mirror what's ever on the Raymond James side to the Fidelity side. So if there's one IRA account that's, you know, an investment account, we're gonna move that over as is. And then if you have a cash account, that's going to be a separate account that will move over as is. So we have some clients with as little as one account. We have some clients with 10 plus accounts. We're going to create all 10 accounts on the Fidelity platform and then move them over as if nothing will change.
Right.
And naming should be the same as well, I believe, right, Chris? Just kind of mirroring some of the names that accounts are titled.
Yeah, that's the objective, right? We want this to feel the same, right? And not disrupt the portfolio, the strategies, anything you've put together with your advisor or your planner. So all of that should stay the exact same. Now, will the exact short naming that we've set up that says, you know, John's cash IRA, John's growth IRA, will that stay exactly the same? You know, we'll have to figure that out exactly what that's going to look like, but we're going to do our best to replicate it as much as we can. There's certainly customization available there, so we'll be able to customize it. But, you know, there might be slight variations. I don't want to overpromise there, but absolutely, it's going to, you know, we have 3 accounts for you. Those exact same 3 accounts will be open on the new tool.
Yeah, and just adding a little bit to this conversation, I mean, as you all should know, I mean, our job is to deliver the highest, you know, caliber of service to you as possible. So going through this transition, it would be naive of us to think that it's going to go perfect, right? So if you have an experience that, you know what, you need some help, like that's what Robin's here for. That's what your advisor team is here for. Like, lean on us. Like, this is not going to be a transition. We're going to, you know, we've been with Raymond James for 20 years. This is not something that we plan to do in the near future, or maybe again, you can't say it never or ever, but just the reality is, lean on us. We're here to help. So if things aren't working and you're getting frustrated, like, call us. Like, our job is to help. Like that, you know, Fidelity, they're 1-800 and their online support can help you in some areas, but that's what you lean on us for. You should still treat the relationship with Vance Wealth as you always have.
That's right. And just to speak to that as well, I mean, we on Fidelity side have back-end support. So we have a dedicated relationship management individual. We have a dedicated team internally at Fidelity. So when it comes to questions or unique circumstances, we have a team of internal folks at Fidelity who are dedicated to working with our branch and a handful of others, right? So we're not just picking up the phone and calling a call center on your behalf. We're actually going directly to someone that we know and have a relationship with, who we can work through issues with. So I'll reiterate what John said. We're going to try to make this as seamless as possible, but things are going to happen, and we know that, and you guys know that. No one's naive to that fact. So, but it's our job to make sure we remedy any issues that pop up and make sure that we, tackle everything in a timely fashion, and really are just transparent with our communication. That's one thing we found over the years, is we just want to communicate openly with everyone. And if something isn't going according to plan, we will let you know directly. We will, make sure that we get it cleaned up, and it's our job to do that with a minimal impact on you, right? So if someone has to call into a call center, don't sit on the phone for 30 minutes waiting for some random person to pick up the line in Tennessee, where the call center is based out of, right? Call us, we'll jump on the line, we'll figure it out for you and get back to you. So,
Chris, I'm not sure if we covered this in terms of timing. I think we had talked about early to mid-February is when we would actually want to make the transition, and hoping that all client accounts have essentially moved over by the end of March.
Yeah, I mean, that's the goal. So we're right now, we are in the process of kind of compiling all the information for everyone's accounts and getting that geared up in Fidelity system to generate account paperwork. Again, we don't want to send you, 8 blank account opening forms where you have to fill out your address the same way every time, all those things. So we are doing that work on your behalf. And that's why, for anyone based in California, we are requiring that positive consent form, which is just a compliance formality. And then, once we have all that data put together and ready, and we've scrubbed it and made sure, double and triple checked it to make sure it's accurate, we will then begin kind of, for our entire client base, opening accounts all at once, and we'll begin that process. And we have several members of our team who have dedicated time this coming quarter and for as long as necessary to work on that. So we'll be able to handle that load and make those get through this process for you. But it is our goal to have all of your accounts moved over and this all cleaned up by the end of the quarter. Is it going to work for 100%? I hope so. That's the goal, and we're going to try to work through it. I'm sure there will be some exceptions or some things that drag on into the second quarter, but we're going to make this as efficient and seamless as we can, and that's the intention. So you should start hearing from us to actually sign new account opening paperwork probably by the middle of February is what we're looking at right now as a realistic timeline. So in the next 4 to 5 weeks, you should be hearing from us and receiving digital account opening packets, either through DocuSign. There's another tool that Fidelity has called Agreement Express, and we'll be running the signatures through both of those tools.
And Chris, I think that the answer to this is that so if a client needs to open up a new account right now, let's just say there was a reason they need to fund an account, an IRA, Roth IRA. They have some cash that they would need to set up a different account. We would set that up through Fidelity right now. We're not going to be opening any more Raymond James accounts. Anything new is going to go through Fidelity, even if we haven't fully transitioned over. Is that correct?
That's good. That's the goal. Never say never, like you mentioned earlier. But we have the ability now to open accounts at Fidelity. We are in the process for some new relationships that we've just engaged with, as well as some existing clients who have kind of, new accounts they've wanted to open. We now have the ability to open that at Fidelity. So we will begin that process. And if there's something time sensitive, then absolutely we're going to get started right away. If it's something that, hey, this year we decided we're going to pursue a Roth conversion strategy, but when we convert, based off the conversation you've had with your advisor, doesn't matter, or we're okay waiting till quarter 2 to do that, then we're going to transfer your accounts, let everything get set up, then, open the Roth IRA or whatever. So, but we have the ability to get everything going as quickly as possible. So we're not going to delay because of this transition. We're going to move things forward as needed.
Well, and for us, it's really business as usual. Like there's nothing that's going to change for us. So we're going to start scheduling our annual review meetings for clients pretty much starting the last week of January and going through. Usually we get them done by May. So those are going to be being scheduled. Whether you're on the Raymond James platform or Fidelity, we're going to have those meetings. Our investment management, we're still managing the portfolios, doing rebalancing, putting cash to work. Like that's not stopping. So, you know, when clients get moved over, we're going to have the ability to trade on both platforms. So just you don't have to worry about that. I know sometimes when people feel that things are in transition, that my portfolio is not getting looked at or I'm not being tended to, that is not happening. We're going to have the ability to be managing effectively because our trading tool that we invested in can actually do it both on the Fidelity and Raymond James platform at the same time. So just rest assured that those are going to be detailed. Those are details that we're keenly aware of, and that's an important part of obviously our value add as a firm.
That's right. So thanks for touching on that. So those are all the questions that have come in. So we have one other little announcement to make. So we'll jump to that slide. But if you have another question, feel free to throw it in the tool. If not, and something pops up in your mind later this evening or next week, as John mentioned, all of our annual reviews, we're beginning to schedule those. So you'll be having your annual review with your advisors, or just reach out, you know, send an email to John or to Jerrod or whoever your advisor is and ping them. I mean, we're all communicating on this internally and we're able to answer your questions. So, you know, don't feel like you can't ask a question because you missed your opportunity today. Feel free to reach out to our team, call us up. You know, Robin's available and very much in the loop on all of this and driving a lot of these processes forward. So, you know, feel free to reach out to us. As John's mentioned a number of times, we're here to be helpful to you. That's what you're paying us for. And so, you know feel free whenever you need to reach out to us. We did want to plug our webinar that's coming up next. Is that next week? Geez. January 17th. Yes. So John, I don't know if you want to speak to that. We know the market and the economy are big topics right now. So this is obviously timely. Anything you want to throw in or chime in as it relates to this?
Yeah, so as many of you know, I've been doing this for about 20 years, hosting this, and it's a really good opportunity at a big picture level to go through history of what's been happening in the markets over the past year, and then look at what our expectations are going forward. And most importantly, when we come off of a year like this past year where the markets were negative, and when we looked at negative, they were negative in stocks and real estate and in bonds. So it was a tough year for investors in general. So we want to make sure that we give this opportunity to share our thoughts about or actually just kind of a debrief of what happened, but then also what our plan is on a go forward basis. And I know this recessionary conversation has continued to come up, so we will address that. Because one of the reasons why I'd really love for you to attend or at least listen to the recording, because we will have it on YouTube, is that, you know, when we do our annual review meetings, we want to focus on your financial plan, how your money has done. So we want to focus so much about you. This is really a good opportunity to learn at more of at a high level, more of a macro level about what's going on in the world and going on in the markets. And so hopefully you can join us. It's definitely one of our highest attended webinars. So I'm excited to see you all next week.
Great. Well, thanks, John and Jerrod, for joining us. Thank you, everyone, for hanging in there. We hope that you found this to be helpful. Again, we wanted to carve out the time and make sure that we addressed some of your questions head on. And so thank you for your engagement, for the questions that came in. We'll continue to communicate with you through the process, but feel free to reach out to us if anything else comes to your mind after we're done with this call. So thanks, John. Thanks, Jerrod, for taking the time to share your insight and your commentary.
Absolutely.
Thanks, everyone.
Thank you. Thank you, Chris.
Bye, everyone.
Bye.